Well, clearly the ability and attitude of a management team is critical with any investment. In some ways, it's more critical with an investment in the kind of company that we're going to invest in, because those businesses are going to be generating cash, and management then have discretion as to what happens to that cash, and that if they invest it wisely, or if they hand it back to shareholders in a sensible way, that puts one value on the business, and if they squander it on things that don't give a good return, then that gives a totally different value to the business. So assessing management is critical. I don't think there's any real shortcuts to it, but there are some things that we always look for. One thing is you want a management that's passionate about the business, that really believes in the business, that sort of lives and breathes the business, that really cares about the business, that wants their business to win, beat their competitors, win market share, that sort of thing. And a founder will almost always have that. A manager that's come in as a professional manager sometimes will, sometimes won't. It depends on their personality. But that dedication to winning and pushing the organisation forward, rather than having an easy life and swanning around, spending time on the golf course, that's a very critical factor. I think another critical factor, which is a little bit difficult to define, but you want a management team that's quite hard-edged. It's very easy to say all the right things, particularly in big companies, to act as almost like a politician, and try to cover all the possible criticisms that you can have by spending money on things which aren't actually the key drivers of a business. So, for example, if you look at Pepsi, that's a business where the management team seems to be more focused on looking good than in selling more soft drinks, or at least certainly the soft drinks that you could say are unhealthy or not very healthy soft drinks. They seem to be embarrassed by the fact that they sell fizzy drinks. And so it's very difficult to get comfortable with a management that doesn't seem to think the key thing is to drive forward their main business, because they are perhaps in some way embarrassed about it. I can give another example of, I won't mention the name, but a publishing business that's listed in the UK, where the management team are genuinely embarrassed, I think, about the fact that they publish things, they print things on paper. It's seen as a very unsexy thing to do, and they would really like to be in a different business. And that's dangerous, because they are then likely to sell those businesses at a price that's too cheap. They're likely to buy other businesses at prices that are too expensive, and their focus is not going to be on the key assets that they already own. So I think those are two things that I would say are important. Obviously, there's the fact that you want to look for a management team that has a big stake in the business. Not necessarily a large percentage of the business, that's always reassuring, but a large percentage of their personal wealth tied up in some way in the equity of the business, rather than in their salary and bonus. You always wonder about people's motivations if they're not willing to buy their own stock, particularly when it looks cheap. So I think that those would be my three things that I would put forward.
Yeah, I mean, low ego is something we like to see in management team. It's not a must-have, but when managers' egos become bigger than the business, then the business sort of becomes a platform for their ego, and they're much more likely to then get the key capital allocation decisions wrong, because they're doing it for the wrong reasons. And the most obvious examples are those that buy businesses at a high price because they just want to build the business very fast, and not thinking about return on shareholders, return for shareholders, but thinking about how big an empire they're building. So finding managers that are self-effacing, are able to be self-critical, and are continually focused on learning and getting better. Very difficult to judge, but certainly something we look for.
Are there any examples of managers of publicly listed companies in the UK or in Europe that you care to highlight as an example of good capital allocation or good stewardship? Perhaps a company you've come across in your database where you go that here's a management team at the helm that is compounding intrinsic value and is capable and very well incentivized. Perhaps it wasn't the right price, but somebody you would like to partner with. Are there any examples?
Well, there's a company that we have an investment in, which is a small cap software company called K3, and we think that company is a very sensibly run company. There's two main managers there, the chief executive and the finance director, but they operate almost as co-chief executives because they've got different skill sets, and they are very disciplined on acquisitions. They're buying businesses, good businesses at low prices, and then they're integrating them well, and they're getting more out of them than the people that they sell, that they buy from, that sell to them. And they've got a decent stake in the business. They own about 3% of the business each. Most of their net worth is in that stake, and you can trust them, I believe, to grow that business sensibly. Unfortunately, that business at the moment is subject to possible takeover, where the private equity might come in and buy it and presumably incentivise the management team even more to keep doing what they're doing. But that, for us, would be a good example, I think, of a business where we feel we know the management team quite well, and we feel that they can be trusted to do a good job.